There are 3 common mistakes investors make when using ETFs. Number 1, replicating exposures. The biggest issue I see is investors holding 2 or more ETFs with the same underlying exposures. If you hold a diversified pre-built ETF like those from Vanguard or BetaShares, you will already be holding a portfolio of over 5,000 individual share exposures. So you really don't need to be adding more of the same general exposure like another NASDAQ index or another Australian market index. Other issues include holding multiple ETFs with the same investment mandate, like dividends or US tech stocks, or choosing a passive index ETF over a certain market, and then adding an actively managed ETF as well. In all these cases, all you are doing is diluting any chance you have for your investment portfolio to outperform. Number 2, not having a portfolio plan. The second biggest mistake is not having a plan for your portfolio. The best way to construct a portfolio is by using the core and satellite method. You choose blue chip exposures for your core portfolio and then add a little spark using the satellite portion of the portfolio. A good example would be using the Vanguard High Growth ETF as a core exposure, and if I'm fairly aggressive, I may allocate 60% of my portfolio to this. And then with the other 40%, I can choose investments that I think can outperform, but may be more volatile. Things such as Bitcoin, gold, or maybe even an allocation to the fast-growing Indian economy via an India ETF. If you are less aggressive, you may want an 80% allocation to the core and 20% to the satellite. You choose the allocation that best suits your investment experience and goals. Constructing your portfolio using the core satellite method is a simple yet logical way to give your investments the best chance to work for you. And number 3, not considering international and thematic ETFs. The Australian stock market makes up less than 2% of all global stock markets. Hence, the overwhelming opportunity for Australian ETF investors is in international shares, and in particular, the themes that we cannot access in direct Australian stocks. For example, the top performing ETFs over the last 3 years have all been thematic exposures, from US tech FANG stocks through to crypto companies and video games and esports. And these themes have massively outperformed the Australian market. I'm also confident that select international markets and investment themes will significantly outperform the Australian market in the next 3 years as well. Think Asia, India, AI stocks, clean energy, just to name a few with serious potential from here.